We are going to start the discussion by talking a little bit, if you don't mind, about your personal entrepreneurial journey. If you could take us back to the start on how you founded LendingTree and what was going on, and you know, just walk us through that story a little bit.
So first off, thank you all for having me here. Hopefully I'll wrap up your conference with something reasonably exciting and at least interesting. LendingTree started in 1996, so we've been at this 21 years now. It started literally out of my own frustration with the mortgage process. So I was an accountant in 1994. God, that's a long time ago. I was 2 years out of college, and I was buying a $55,000 condo in Pittsburgh. And I looked at a rate table in the newspaper, which I found out those rates were fake, ironically, which a lot of times we find that on the internet today. And I went to the lenders on that rate table and found out those rates were not the real rates. And I got the runaround. And so I spent the next 20 years trying to basically make lenders compete and try to have transparency and fair dealing and real offers and ratings and reviews. And that's what we've been doing. So in the early days, I mean, there's lots of different stories. I assume banks, for example, that if I sent lenders information, I could get back pricing. So one little anecdote early on, my first lender said, well, we can't get anything electronically. Can you fax it? And I said, fax it? Yes, I'll fax it to you. So we had to come up with technology that basically would take something off the internet, convert it to a fax machine so we could send it to lenders so that they could re-enter it into their system. By the way, that happened, I kid you not, like 3 years ago with another lender, like a big company. Like it's still actually going on. So we had to develop the fax machine stuff. And then early on, I had to teach lenders. I developed what I called the best practices manual. And I said, if you respond quickly, you have good service, good pricing, and you follow up on your reviews, you'll have better conversion rates. And people thought I was brilliant. And believe it or not, they still do with those kind of basic things. So actually, you guys can have a lot of impact because you all telling your companies how to do it right basically is what consumers want.
Great. So we've got a few startups in the audience. Was there any one individual that played a overweighted role in your start, maybe an advisor or an investor?
So there were a lot of them, and we took a very non-traditional startup role. So we had, at the time we were going public, eLoan was out there. There were lots of online lenders. There was Quicken Mortgage before there was Quicken Loans, which was part of Intuit. The key people for me were Jim Collins, who, if you ever wrote Good to Great or read Good to Great and Built to Last, he was a teacher at University of Virginia where I went to business school, and I went to 1 hour of listening to him talk, and he basically convinced me to start the company just by sitting in his classroom. And it's a half an hour conversation about that if you guys want to weird out on Jim Collins. I love the man. He's just a wonderful guy, but he basically, through his teaching and entrepreneurship, really helped me a lot. A woman named Sarah Sarasvathy in entrepreneurship. I teach classes with her now. She's pretty amazing. My dad taught me how to sell. Sold cookware and golf balls. My first jobs, and then, believe it or not, Jack Welch convinced me to take LendingTree out of IAC and try to restart it again after the mortgage crisis. So I've been really, really lucky.
Yeah, that last one's a good one.
He was epic. He literally walked into my office and said, Doug, in his Boston accent, Doug, you're a bleeping idiot if you don't take this company and turn it around and move your bleeping butt back to Charlotte and do this again. And it was epic. And I listened to him and we did it.
Very cool. Yeah, I want to get back to that in a minute so we can talk about the story, how you sold LendingTree and then ended up running IC and taking it back. But before that, you mentioned Sarah from UVA, and I heard a keynote that you did recently about something that she talks about called effectuation. And I think that's a pretty interesting mindset for folks that are starting businesses. Can you talk to us a little bit about what that means and how it's been impactful in building LendingTree?
Sure. So effectuation is this principle, which go look up effectuation.org, and the woman who and now a team of people, this is research wonkiness, but this woman named Sarah studied expert entrepreneurs who had started multiple businesses, at least one had gone public, had at least one exit, and had to get to, I think, $1 billion in market cap at least once. Studied them and gave them the same set of data, and they all went in different directions. And she basically said, oh my gosh, I thought we were going to come up with like the how-to manual of entrepreneurship. There were going to be certain things they all did. It turned out that they actually all thought the same way. And that entrepreneurship is actually a method of thinking that I believe will be ever as much impactful as the scientific method, if you can believe that. So for a good example, entrepreneurial thinking starts with what you call the bird in the hand. It actually doesn't start off with what I did, which is to start an internet company where you have no clue about the industry, the regulatory environment, the banking environment, technology, or anything else, right? Like I'm not, I can draw some parallels, but you start off with what's your bird in the hand? Well, who do you know, what do you have, et cetera, et cetera. Second thing you focus on is affordable loss. When I left the Jim Collins thing, when I left business school, my affordable loss was 1 year. I said, I'll give myself 1 year. If it doesn't work, I'll come back. So entrepreneurs don't take risks. That's part of the affordable loss thing, which you can go on. Then the third principle is what's called the crazy quilt. You do things through partnerships as opposed to paying. You guys, by the way, this conference is epic, right? So you just heard a band, right? That wasn't, Bruce Springsteen. Didn't cost these guys much. Complete effectuation. Help them, right? So we help them. You guys feel good, and these guys saved a bunch of money. You're not paying me to speak. You're not paying anybody else to speak. You're freaking completely effectuating a conference and helping your business at the same time. Like this is a great example of entrepreneurial thinking that you're actually witnessing right here. And that's basically the way you do it. And then you try to stitch it together. So with me, it was early lenders. That was my quilt. So when I went to early lenders, and they said, I need you to have skin in the game. There's another concept in there. I need you to have skin in the game. Help me get to, you put skin in the game, you make money when we make money, and we made that work. And then those early mortgage companies, a lot of them are still customers today. So that's how you do it.
That's awesome. And what a journey it's been. I don't know if everyone has been following the LendingTree story, but the last few years has just been tremendous growth under Doug's leadership. Revenue has grown almost 600%. That's 600% since 2011. And in the past 3 years alone, their market cap has gone from $500 million to over $2 billion now. What do you think are the most important areas for business leaders or department leaders to focus on to achieve sustained growth?
You didn't give me that one in advance, I don't think.
Sorry. How about this? What areas are you focused on now, right? Your business has been through a lot of different stages.
All right, so that's easy. So for us, it's very, very easy because basically we're like I feel like I'm the dork in high school who all of a sudden everybody could never get a prom date, and now you want to take LendingTree to the prom, right? And we've been doing it for 21 years, and we've been telling everybody the same damn thing for 21 years. So the things we're focused on are the same things we've been focused on, and now the beauty of it is it's not as much of a competitive environment. Now it's really about execution. So the things we're focused on is helping lenders and helping customers. And what we try to do is if I can, from a product standpoint, by the way, here's how you get sustained growth. Long loop to your answer. Find out where you can help. For us, it's helping our lenders, helping consumers, and helping LendingTree. And if I can put those 3 circles together, we got a killer app. So for anybody else, which by the way, even internal even inside, you can effectuate inside. Like I say, always co-create with your clients. Your clients are internal people at your company sometimes. Sometimes my clients are internal people. You can actually co-create with them. But we try to find those three intersections. And the nice thing is, once you do that, it's not rocket science. The other principle of entrepreneurship that from that stuff is to walk in people's shoes and really actually understand what they're going through. When you can really understand what a consumer is going through when they're filling out that form, they're applying for a loan on the internet, you can really understand what an entrepreneur is thinking when they're doing a startup and they're entering into this new industry, when you can understand what a lender's thinking or somebody inside of a company's thinking. I mean, I tell our compliance department, they need to think about their clients, sometimes the compliance department at the lender. You need to understand what they're thinking. You need to understand what they're thinking about you in this sort of crazy internet company and this newfangled model. They've been around for 20 years. Like, you need to understand what they're thinking and make sure that you can walk in their shoes. So that's what we're focused on. So inside of that is helping lenders convert better, which, as I said, comes down to simple things that the good news is are on the side of the consumer. Being more transparent with consumers, and then if we do that, we make more money.
Nice. Yeah, we have a similar philosophy about putting ourselves in other people's shoes. We call it WIFM, what's in it for me,
I love
right?
it.
So what's in it for the customer?
I love it.
And if you can't answer that question, then why you calling the customer?
Yeah.
So very similar. Let's switch gears a little bit and talk about the market, the consumer finance market. There's been a lot of changes just in the last 5 years in consumer finance, everything from peer-to-peer lending or alternative lending to robo-advisory to mobile banking. What do you think are some of the there's so many changes. What do you think is the most meaningful for the customer? We can start there in terms of what's happened in the recent past.
Got it. So I will give you probably the opposite of what you want to hear. I actually don't think things have changed as much as people think they have.
Interesting.
So-called peer-to-peer lending was actually peer-to-peer when Chris Larson started Prosper probably 16 years ago. It was actually peer-to-peer. P.S. It didn't work, right? So then it became peer to multiple institutions, which, by the way, for everybody who's in the mortgage business, knows that that was mortgage correspondent business since the mortgage bond was invented by Lou Ranieri 55 whatever years ago. So what's old is new again. The difference is it's on the internet and it's more automated. So I think the big thing that's changed has been finally, lenders. So if you think about, as I think about the industry since September 11th, 2001, okay? We went public in 2000. September 11th, industry or company went into a crisis. What did? We cut rates. We had a refi boom and a real estate boom that lasted until 2007, 2008. Not a single lender in America really cared that much about, like, everybody in the industry was fat and happy in a general way of putting it. Then the world changed. Now, the world's normal again. Lenders want to lend, borrowers want to borrow, everybody's being reasonable, and the internet's taking off. Lenders are paying attention to technology, lenders are moving things online, you now have cloud computing, Because of all of that, all of those trends, you now have lenders actually automating, which is making things, which is lowering costs, which is making it easier for them to do business online, which is making it easier for us to do business with them. And then obviously consumers are coming online. Half of our business is mobile. If you had told me years ago you could fill out a loan application on a mobile phone, I wouldn't have believed it. You can do it pretty easily. But I think it's just this tsunami of the fact that our industry will be online. And by the way, we're still early. So sorry to keep going here. LendingTree is 50% of the comparison shopping spend in the online mortgage industry. We do 2% of the mortgages. Oh. That means only 4% of the mortgages are going through comparison shopping sites on the internet. 70% of United States travel goes through Expedia and Priceline and companies like that. lending is going to be the exact same way. Why? Because consumers save money. Save 400 basis points on a personal loan, you save at least a quarter point on your mortgage by comparison shopping, and we can document it. So people are going to do it, and then we just feel like we're in a good position. And it helps people.
2 follow-ups to that answer. 50% of your loan apps happen on the mobile phone now. Do you have any predictions about where you think that'll be in the next few years? Is it steady up and to the right?
Gotta be right? It's got to be most of it.
Most of it, yeah.
Well, it's already most of it. Who sits at a desktop anymore? People do a lot at work. So other than work, any after hours is mostly mobile at this point. Okay. And then it's now becoming app-based. So our My LendingTree app has 5.2 million users in it, and it's an alert-based app where you can basically, we just tell you we can save you money. So if any one of our 400, 500 lenders can save you money on a mortgage, home equity, credit card, personal loan, we just tell you that we can save you money and let you know.
Nice. All right, so this is a compliance conference.
Yep.
So we're going to ask you a couple compliance questions.
I love it.
What are some of the things that LendingTree does to protect your brand and avoid potential consumer misreps in a very fragmented marketing world with affiliates and third-party traffic sources and ad networks? How do you guys manage your brand, which you've invested many years in and a lot of money in?
You have to, I'm not just throwing gratuitous comments at you guys. We've cared about compliance since literally the business was just me in my business school apartment. I'll never forget having, sorry if anybody's from state mortgage banking departments, I love you all. You all have incredibly complicated ways to get licensed in your states, but we did it, so we're happy about it, and we hope everybody else follows. So literally I had 50 state applications out in front of me. If anybody here is from the state of New York banking department, there's one that has a gold frame around it for you guys, which we can talk about later if you want to know, because that's what it cost me to get the New York State banking license. But we've taken that very seriously. You can never be out of faith with your customers. You can never be out of faith with your lenders. The lender compliance is almost as important as LendingTree's compliance with rules and regulations. So if you're going to sign, if you're going to do business with Chase Citibank, Wells, B of A, et cetera, they're going to give you a good compliance beating to make sure that you're in compliance. So that's on the compliance side. Then we make sure that we're telling the truth every time we advertise, which is pretty simple. And we make sure that that lenders are never out of faith with what they're advertising. So lenders are effectively advertising on LendingTree. We need to make sure that they're not lying. So we actually police them. I sometimes say that, I know there's people here from the CFPB, I sometimes say we are literally, in some ways, the for-profit CFPB. Our vision in life is to have complete transparency, complete fair dealing among the consumer lending industry and help the best lenders succeed and the worst lenders make it completely transparent. Elizabeth Warren and I completely agree right up until she goes, so therefore government, and I say, so therefore LendingTree. It's literally, that's like the fork in the road for many of the same conversations. Which is also what's pretty cool, by the way. We all agree on the same goals, which is how we're going to get there.
Yeah. Do you think the regulators, like the CFPB or pick your alphabet soup, are doing enough to reach out to forward-leaning consumer finance companies like LendingTree to be proactive, to avoid consumer harm and help innovation? Do you think they could do more?
As a political observer, I would always love the government to reach out to us. At the same time, I believe that we are the government, so it's our responsibility to be part of the government, and so it's our responsibility to reach out to them too. So we try to make sure that everybody in government knows what we're doing and they understand our the way we price and what we're up to, and that we make sure that they're kosher. I mean, at the end of the day, regulators aren't like these, horrible people. They're freaking trying to enforce regulations. We're all doing the same thing. We all are trying to get the same place. And a lot of time, LendingTree has this interesting problem sometimes because we have to get, for example, licensed as a mortgage broker, but we don't fit the definition of mortgage broker. So we actually, with every state, have to sit down and say, well, we're trying to comply with your law, but like you say, like you have to keep a paper document of a loan file with a written signature. Like we don't do that. So, but your law says for compensation or gain, you have to be licensed as a mortgage broker, so we're getting a license, but you also say you need to maintain a paper copy of a loan file with a written signature. We can't do that. And so you deal with the regulators, and they actually get it. And they go, okay, got it. And you work together, and you make sure your lenders have documents, and you pull them out, and people move on. But always need to protect you can never be out of faith with anybody.
So that concept of working with the regulators to interpret a rule and then make sure they understand that you know the intent of the rule, even though the rule doesn't apply to your business. That's something that we've heard a lot with some of the FinTech companies and so forth.
I think so. Yeah. I think so. And by the way, it costs real money to comply. But for any startup, we just freaking passed on a startup the other day. The guy probably would have made $20 million, and his advertising was out of compliance. We thought his lender stuff was out of compliance, and we had to pass. I mean, it was we weren't taking the risk. There's no reason to screw around with it. It's going to cost you a little bit of money, but get it over with and do it.
Yeah, good advice. Get it over with and do it. So talked about advertising and marketing. I've always been a fan of the LendingTree TV commercials, and this is just kind of thinking of this commercial now. Are there any channels or any advice or tips you can give the audience about places to go for customers and traffic that may not be wildly obvious, or maybe you want to talk about your TV spend a little bit and how you guys leverage TV to build your brand, or kind of any just free flow.
So I think a really interesting, which we're not as good at, I'll give you 3 examples that I think are pretty amazing. I think with marketing, the interesting thing that I've noticed is if you can do something in a completely sort of side door way, right? We talked about effectuation earlier. What do Zillow, Tinder, and Credit Karma have in common? They all took a high intent, very serious transaction. All right, Tinder transactions, bad word. And they made it a low intent, easy transaction. And they changed the marketing. They flipped the marketing on its head because of that. So you were able to, so what's Credit Karma to do? Like, come get a free credit score. You're not making money on a free credit score. You're making money off of selling credit cards and selling personal loans. Tinder, like I was at IAC when we were having Match. We were making online dating incredibly serious, and then they made it unserious. It was beautiful. By the way, same company. And Zillow did the same thing. We had realestate.com in 2000. Everybody was coming in right in the front door. Come to us and shop for homes. You can complete the most serious transaction of your life on the internet. Zillow goes, hey, come get his estimate, and change the game. So I think that's one way to think about marketing is how can you come in a side door and come in a different way. For us, that was when banks compete you in, which, by the way, in an effectuation story, that tagline was almost exactly written by a focus group interviewer in 1999, wow. Who in a videotape said literally, well, geez, the banks are going to compete. I'm going to win. And when she said that, we went, this is good. Like, let's think about that. When banks compete, I win. And then we rolled around and we're like, all the marketing talent in the world didn't outdo a $15 and a free lunch focus group participant. So, and $1 billion later, there we go.
That's awesome. Thank you. All right, so we want to open it up for questions now. and then we're going to move to the wrap party. Jesse?
Only because I really feel, so before I came to LendUp, I was a state regulator, your favorites, and at the CFPB, your second favorite. And I really
And
feel
by the
like.
way, I mean it.
No, no, no.
Like, I actually mean it. So.
I was listening to what you were saying, and I really feel like you guys, I think you guys may be alone in your view on the role of, say, a LendingTree. Because what I see from others in your position, they're running from the thought of being the private market CFPB. They are running from that. They're running from the state.
In what way?
They don't want to have the obligation to feel like it is their responsibility to police their customers.
Well, okay, but policing, it's actually, reviews police themselves. So ratings and reviews, it's a very, very, very self-policing mechanism, believe it or not. If a lender, it's funny, when we give a lender diagnostic, one of the biggest things is if you don't follow up on reviews. And we literally we tell lenders, if you don't do this, your close rates go down. And we can correlate it. We can say, oh, your competitors do this, you don't. And therefore, they convert twice as high as you. But yeah, but yes, you're right. So it's policed, but we don't put we try to have other people do it.
You guys in particular get licensed in these states.
Yeah.
In compliance, also not necessarily identical to your competitors.
Right.
But the interesting thing, I've now started to see somewhat of a change somewhat of the states where they're starting to actually listen.
Good.
And some of the states have changed their licensing to have lead gen licensing,
Good.
if you will. So I'm curious to see if those changes have been a positive impact, a neutral impact, a negative, because I know that there's only one or two, maybe three states which have said, you know what, you guys aren't
Right.
a mortgage lender.
Yeah.
We're not going to regulate you.
So I think, and I can really wonk out in this audience. There's a mortgage modernization bill, I believe, sort of sitting through Congress. I think there's an opportunity, and it makes sense, to differentiate between a broker and an online marketplace / lead aggregator / something. And that there should be a set of different standards and regulations for a company like us than somebody else, which, by the way, any standards you put on us, great. Put them on, because if anybody makes everybody else listen to them, like the thing I say to everybody, we will operate on any playing field as long as it's level. But if I have to do pricing one way and some guy's flying below the radar, it's okay. You can do it for a certain period of time. The difference is, as you're hitting on, a lot of companies don't do that. We want to have a $2 billion, a $10 billion, a $50 billion, an iconic company that's around for 100 years, and we can't do that in a shoddy way. And we've had, like, FinTech now was FinTech in 2000 and FinTech in 2005, and there's been a lot of these cycles, and there's been a lot of LendingTree competitors, including Google twice, Yahoo once, and Microsoft once, and a bunch of other ones that have kind of come and gone, and a few that are still around. And if you don't play it right, if you get out of faith with your lenders, which means you send them low-quality crap and you tell them it's something else, that'll screw you up. If you're out of faith with the compliance people, if you're out of faith with your customer, like you got to do it the right way. And by the way, sometimes that's freaking hard, which means you got to figure it out. But if you want to be around for 20 years, you got to do it. It means you get gray hair, but it's all right. You don't have any yet.
No, you got a little bit.
Thank you, though. Yeah.
So back, I worked in the mortgage lead generation space a while back too. I know that one of the things that's different about LendingTree prior to the IAC acquisition is LendingTree also had LendingTree loans. Was there a specific decision point that became evident as to why you wanted to jettison the LendingTree loan business?
So I'll give you, in the spirit of time, I'll give you why we got in and why we got out in 30 seconds. We got in because one of my lenders literally said to me, I need to thank you. I make $20 million a year, and all I do is LendingTree mortgages. And I have one partner. And I said, oh my gosh, LendingTree is only making $10 million, and you're one of 200 lenders, so something's wrong here. Turned out, as we understand the correspondent mortgage market, we developed the choice model. We got permission from the correspondents, for all of you in the mortgage business, to basically use their name. We bought a mortgage company, and it worked great. It worked great until loan loss reserves, and which I could go deep on that, and the fact that, like, banks tell you that, you know, a no-doc loan, that somehow you didn't get income verification, that means that you didn't underwrite it effectively, is insane to me, but I'll leave that aside. We got out of it for that reason. We got out of it because I could not see the end of loan loss reserves that were unadulterated and complete BS being rained down on us from the bigger lenders. And we were the last guy standing, and so everybody wanted their piece of money from us, and we had to get out of the mortgage origination business. And it, honestly, there were a lot of other mortgage companies the same thing happened to, and unfortunately it was the little guys that got hurt the most.
Okay. I think we are about out of time and ready to kick off the wrap party. Please thank Doug for joining us this afternoon.
Thank you.
Great. Thank you, Doug. Awesome.